The AIM market here in London continues to be of interest to many with its many benefits. But how are stocks performing as the benchmark FTSE 100 blue chip index shows signs of summer fatigue? Chris Boxall joins us now from Fundamental Asset Management. Chris, welcome.
Hello, hello.
Back after summer, how are things for AIM stocks?
Yeah, pretty good. It's been a pretty good period since we last spoke, and we've had some great performances from a number of the bigger companies, as we'll discuss one of them, later. But yeah, it's been a pretty strong period for AIM. We even had a sort of a bit of a resurgence in the new issue area, some good new companies coming onto the market. Some of them have performed already very strongly. And yeah, I'm very confident, so it's a nice quality market now, AIM, very different to what it was 10 years ago.
As you say, we've spoken to you before about your portfolio. You put together portfolios for people, don't you? I think we've got a list of some of the stocks that we've been looking at over the last year or 18 months or so. And we've got here 9 months into the year, we've got a year-to-date return and also the dividend yield for those that follow that sort of thing. Of those on this list here, where do you want to start?
If we can perhaps kick off with H&T Group. I don't think we've spoken about them before, not very much. They're at heart, their core business is pawnbroking. They've been around for a long time, so pawnbroking, gold purchasing, in a connection with that jewellery retailing as well. And then they've moved increasingly into lending as well, personal lending, and also other activities around that, even foreign exchange. So lots of financial services around the original pawnbroking business. Clearly they were hit many, many years ago, financial crisis, when the gold price came off. And they're the surviving, they were until recently, the only surviving pawnbroker on AIM. There was another one, Albemarle Bond, which has gone. But H&T Group's done really nicely. And their recent results, interim results, were fabulous. Pre-tax profit was up about 60-odd%. EPS a similar kind of level. Valuation doesn't look too rich. We think they could go a lot further.
Subject to the gold price going up, or how much of it is related to that?
Obviously they're doing nicely out of the gold price, but we urge investors not to be fixated by the gold price on this business. That's really the icing stroke cherry on the top. The rest of their activities are going really well. They've even expanded, significantly into watch retail, high quality watches. They now display 500 plus, high quality watches on a separate site. So there are other bits that are going well, but you're right, the gold bit has done really well. And clearly, I think we mentioned a few minutes ago, the gold price now at, substantially higher.
Yeah, 10 months higher.
They're getting another boost out of that. But the interesting thing about them as well is how their price has underperformed and their valuation relative to one of those new AIM entrants I mentioned, called Ramsdens. Ramsdens is also in the business of pawnbroking, personal loans. It's been growing with its foreign exchange bit as well. But since IPOing in, I think, February, we said, for Ramsdens, their share prices materially outperformed H&T. And I think it's worth, maybe people considering a switch or into, if they're not holding H&T at the moment. I think H&T's got a good track record on AIM. It's delivered doing some very tough times. So really worth having a look at them. Very strong management team. Both the CEO and the FD have been with H&T for a long time. Let's
switch sectors, because the second stock you want to talk about is smart metering systems. This is something that we've spoken about before.
Yeah, absolutely. I mean, it's a bit of a hot topic. It's been a hot topic for a while. Many have had bad experience in the smart metering space. You're probably familiar, we're mandated now to have installed, all the domestic homes have smart meters by 2020. That's circa 50 million meters are due to be installed. That's such a huge task that there are bound to be issues, and there have been issues with the equipment, issues with the installation. The thing with smart metering, I think their share price probably got affected by the general noise around the space, but they continue to deliver, and they are owners of the metering assets. They're owners of the assets. They manage the subsequent data, and what they did a year or so ago is they bought their own installation teams in-house, They have their own academy, trading academy. So they very much got to grips with the installation issues early on. They knew it, it was a concern, so they needed control over it.
That's part of stripping out costs, presumably.
It's stripping out costs and really control and reputation. I mean, we had this with another business on our list, Fulcrum Utility. They were outsourcing everything a few years ago, and they're getting on into all sorts of mess. And they brought things in-house as well. And you need control. When things are moving so quickly, you need control of your installation process. And smart metering, since we last spoke, has announced another big contract with, I think, a utility warehouse, circa 100,000 plus meters they're going to be installing for them and owning subsequently for them. And I think, all credit to them. They got to grips with this installation issue early. They control it. They bought into that space. And I haven't heard of issues on their meter installs, which is promising.
Yeah. Okay. All right. Positive.
Share prices nicely bounced as well.
That's
one
right.
of the top performers, I think, since we last
yes.
spoke.
It says it all. It's up.
So it's worth noting on this one as well. The valuation and price earnings, terms looks high, but you've got to look at the cash flow. Once their meters are installed, they're spending loads on meters, largely financed by very, very cheap debt. But when that process is over, the cash is going to come pouring into this business. And they got the ongoing revenue generation from data management as well. So, it's a nice little story through a huge growth market.
Yeah. Okay. All right. Smart metering. Let's move on to the next one. RWS Holdings you're going for.
RWS is sort of shortly going to become, hopefully, one of AIM's 1 billion market cap companies. It is a fabulous business dealing in IP, patent translation, life sciences services as well. It has, as you can tell, it's been a great performer. So it delivers big operating margins, 25% plus, terrific cash generation, and until recently it was heavily cash positive, but it's been starting over the last couple of years recycling that cash into acquisitions. So it's bought 2 US businesses, which gives it a presence on the US West Coast, growth which helps support its growth in the life sciences area. And it's got huge growth potential now. It's a big player in its market, delivering more and more into China as well. And despite the fact it took on a lot of debt to support the latest acquisition, it will pay it down very quickly from its cash. So we like it a lot. Long-term executive chairman in there who owns a huge slice of the company, who hasn't sold for a long time. But great story, and as I say, one of AIM's real blue chips and a big business.
Yeah, 20% up since the beginning of this year.
I think this it could go a lot further. Had a bit of it's had a foreign exchange boost to its last earnings, but nice one to keep following.
Yeah. Students, we hear a lot about student accommodation, lack of it, and so forth. Watkin Jones is one we've spoken about before. It's one you want to talk about again today. I think it's up some 80% since we
it's been a great. When it came onto the market, people really didn't cotton onto it. They didn't look at it very closely. And it was evidently in a good place. The valuation was very modest. Subsequently, one of the big family holders sold down a bit. A trust sold down. Woodford took a big slice of it as well. And the beauty of this business is it doesn't only build out student accommodation, but it forward sells it as well. So you have a good visibility of its earnings. It de-risks itself. So it forward sells to people that want to own these kind of assets that deliver very reliable long-term revenue. Very, quite boring assets though, in pension funds like owning student accommodation. And that's what it goes about. But it also bought a few years ago a student management business as well. So it manages the build out. So it in turn picks up an ongoing revenue stream from the very properties that it builds. It's also into the PRS private rental sector as well, which it's expanding, and residential building as a whole. Nice business, well managed, been around for a long time. And I think, it could have a nice future.
Do you see any risks attached to the property sector? We're hearing a lot about the fact that prices are very high at the moment. Is there much of a risk when looking at this? I mean, clearly students have to live somewhere, they're going to pay for the rental anyway. But is there a risk, do you think, built into this because of high property prices?
Yeah, there clearly is a risk. When things look so good, you've got to look at the negative as well. It's not going to be all a bed of roses. I think that the beauty with is the sector they're addressing, the student accommodation. It still seems to have a lot of support. I've been visiting universities with my daughters, and it's evident the construction going on is phenomenal. Clearly, the university sector as a whole has benefited from the higher fees, low cost of debt, and people wanting to own the assets. When will that stop? That's the big question. The other area they're in is private rental. Again, that's been very much a hot topic. Still seems to have a fair way to go. But you're right. There's going to be a time. I don't know. It's 2 years, 3 years, or whatever, when things may start calming down a bit.
Yeah. If we go back to your main list, there are some stocks that have found the going tougher. In fact, one I want to talk about today is Atlantis Resources. Year-to-date return negative 25.3%. What's been going on here?
Yeah, this is a bizarre one. It's very much our more speculative pick, this one. They're a tidal power generator, so clearly pretty early stage business. And when we first spoke, they were at the out and out outperformer. And since then, it's been downhill, very well, precipitously downhill.
Well, it's interesting, actually, the vertical blue line. In fact, you can see to the right of that, which is the beginning of this year, it did actually quite well coming out of January. But since then, it's been on the way down.
In the expectation of it powering up its tidal power site in Scotland called Maygen. This is its banner project. Ever since delivering on that, it's just, the share price has been incredibly weak. And only last week it also announced that it set a world record for tidal power, generating 2,000 homes from only 2 tidal turbines. So at the operating level, it appears to have done really nicely. It's de-risking itself.
So if you had cash, would you buy into this?
I think, yeah, absolutely. I mean, it is speculative. Look, it's not profitable yet, but I can't see what more it could do other than what it's done. It's delivered at the operating level. It's powered up Maygen. It's de-risked itself with countless other projects. It's created another energy services division. It's also in the running now to develop the Wyre Valley tidal project. So what more can it do? I think the issue around it is the shareholder register as well. It's got a bit of a tail of original shareholders who clearly aren't that comfortable and have been dripping stock onto the market. And maybe if they sorted that out, or they could sort it out, it would be a more comfortable ride for everybody. Yeah. But yeah, I think it's a wonderful thing they're trying to do as well. Tidal power. Yeah. We need to address these other things. So I would encourage investors to have a look at it. Yeah.
Yeah. Okay. Good green companies, you say. What are the final ones you want to talk about? I know here we are on Monday, the 4th of September. We've had some good news out this morning from Bioventix.
Yeah, Bioventix, totally bizarre little company with turnover of we're projecting now 7 million for the year, and about 5 of that, or 5 plus, or circa 6 actually, is going to be profit. So it's a company selling antibodies. It makes huge margins, tiny revenue, and it's just announced today that effectively profits or revenue is going to be about 13% ahead of previous broker estimates. And you can see the chart. I mean, it's been a phenomenal performer. There was doubt a few months ago that it would be able to replace one of its testing antibodies, but Siemens came out a few months ago and said no, they're now going to start using them in a new troponin test. And ever since then, that de-risked the short term for Bioventix. And ever since then, the share price has just motored. But it's a very, very strange little business, super well managed with a founding shareholder still in there. You do wonder. I mean, it takes a lot for, I think, some people outsiders to really believe in it. When it's got, I don't know, the market cap's now 120 plus million, when your revenue's only 7. It's a bit unusual. Yeah,
much of that, of course, generated this year with the stock price you can see on this chart here, having risen from 13.22 all the way up to 25.80 as of today. But certainly
it's a great story.
But as ever, of course, you should always do your own research.
Do plenty of research, especially on that one.
Yeah,
and interesting business there.
Okay, look, Chris, we've got to leave it there. Thanks for joining us.
Thanks very much.
Chris Boxall is from Fundamental Asset Management. To catch up with Chris, you can catch him through his website.